morning, good afternoon, and welcome to Achievers Financial Education. And we're glad to have you guys back with us again. I'm joined here with Fredner Janak, who is going to be giving us some insight to some of the questions that was provided with some of our viewers to help us to understand from a previous segment that we had on life insurance. And we're going to take and dive into some of those questions to help us to understand better about some of the things that they wanted to know more about. So thank you, Fredner, for joining us.
Thank you. My pleasure.
So again, we are always available on Instagram, on Facebook, and on YouTube. So whatever platform you may be joining us, please make sure you join us at 5 o'clock on Thursdays that we have. And if you miss any segments, we're always going to go on there to be able to join. Just click on the button on live, and then you'll see all of the segments that are previously there, so you guys can be able to see anything that you may have missed before, okay? So diving right into it. The first question was, what is the main purpose of life insurance?
Great question. Life insurance, the main purpose of it is to replace your income. If you have responsibilities, you have family, you have kids, you have someone depend on your income, that income is important for the family. The fact it is important, you need to protect it. The best way to protect it is to make sure at least you cover yourself the very minimum 8 to 10 times of your annual income. Let's say you want to protect yourself 10 times of your annual income. Let's say someone who's making like $6,000 a month, times 12 is 72. 10 times of it, it's 720,000. That should be your income protection.
You said 8 to 10 times.
8 to 10 times.
Okay.
You know, if you take 10 times, so it would be 720. If your income is 6, let's say your income is 5,000. You bring home 5,000 a month. 5 times 12, that gives you what? 60,000. And 60,000, you say 10 times of 60,000 with 600. That should be your income protection.
Okay.
The main purpose of life insurance is to protect your income.
Okay, awesome. And then the second question I have here is, does anyone need life insurance?
Great question. Not anyone needs life insurance. Why? Life insurance is the transfer of risk. By definition, it's transfer of risk. If you have money to assume your risk, you don't need life insurance.
Okay.
You get that?
So you said the transfer of risk.
Risk.
Okay.
Life insurance is transfer of risk.
Okay.
Let's say you have an house. Let's say your house costs about 500,000. Do you have at least 10 times or 6 times or 8 times of that money somewhere if your house catch on fire to, you know, rebuild your house like in 5-6 months? Do you have that money?
No, most people don't know.
Most people don't. In fact, you need insurance on that house. You don't want if your house catch on fire anytime and you're on the street.
Right.
And you see your life pass on that house. Your whole life saving pass on that house.
Right.
Because you cannot assume that risk yourself.
Right.
That's the reason why you need life insurance. You need insurance on that house. You get that?
Okay.
Now, if you listening right now and you do not have enough money saved to make sure that you can assume any risk when that occurs, you need life insurance. That's the reason why you put insurance on your car. Right. If your car costs about, hey, depending on the car you're driving, you know how much it is. Not only the car, but if you consider you're driving on the street, if you hit a car for $300,000, you hit someone's car that costs $300,000, you do not have car insurance. You do not have insurance on your car. How are you gonna repair that car?
Yeah.
You're gonna get yourself in a, very, hot water.
Of course.
Yeah. So you better have insurance. Insurance is transfer of risk.
Okay.
If you cannot assume the risk, you better have life insurance, whatever on your home, on your car, on your life. That's what insurance is about, transfer of risk.
Got it. Okay.
Meaning a few people can say, I don't need insurance. That means a few people can assume their own risk.
Right. Okay.
That's the reason why most people need insurance. Whatever life, whatever health, whatever home, whatever car, they need insurance.
Okay. So then that brings us to our next question is, why are there so many different types of life insurance?
Oh my goodness. This one refers to, like I said before, we have so many different types of life insurance. But what the public, the listeners, the audience need to understand, each of those products, each of them, they have been consumed. Let's say the reason behind them, there is a reason. Okay, there is a reason behind each of them. Mm-hmm. Let's say there is a reason behind each of those products.
Okay.
Okay. Now, recently in 1988, in 1988, what happened? Congress here, we have in 1988, Congress enacted the Technical and Miscellaneous Revenue Act. Okay, that we call TAMRA. That TAMRA Act, the reason they took that act, they realized a group of people, they decide not to support the government at that time. What they do, they have tendency to hide the money, okay, under the life insurance. Mm. You see what I mean?
Okay.
You know the money that you put under the insurance,
right.
It's tax-free, right?
Okay.
You know that, right? It's tax-free.
Right.
The money, as soon as it's hiding under the life insurance, is tax-free. Mm-hmm. As soon as they take out the same amount of money, probably they will have to pay tax on the, whatever interest,
right.
or, capital gain or whatever mm-hmm. interest that mm-hmm. earned that money. Okay, now what the TAMRA Act is about is to prevent those people, okay, to hide the money, okay, to use insurance as an investment vehicle. Mm. You see what I mean?
Right.
Now, what they do, they say, hey, if you have that insurance and you put more money that you used to pay,
right.
they're going to consider that insurance as a MEC. What MEC is, it's a modified endowment contract. Mm-hmm. Modified endowment contract, what that means, they're going to consider that life insurance as an investment.
Right.
It becomes automatically an investment. That means they will tax you based on whatever your investment, your money produce as interest or whatever it is. Now, in 1988, now recently people use IUL, Index Universal Life, right? Mm-hmm. The IUL, people use it a lot to hide money those days. If you consider IUL as a vehicle to hide money, now who are those who have money? Basically, not us in the middle class to have $1 million, $10 million, $1 billion to hide in the mm-hmm. in the IUL. Mm. So if you pay attention, that those products, they probably they were conceived them for a group, for category, for class mm-hmm. specific. Okay, you see that class? Mm-hmm. And now when you drop it down to the middle class, you drop it down mm-hmm. to the third class, now it's become like what? Because we do not have millions to hide in the
right.
in the IUL.
Right.
You're probably gonna buy an IUL to hide $1,000 to buy, $5,000. Mm-mm. So you better have a mutual fund. Then you better have an IRA. Okay, right. To make the rule of 72 works in your favor. You know what rule of 72 is about? Your money double every period of time,
right?
Depending on the interest they give you. Why? That's what the rule of 72 is about. Now, instead of buying an IUL as an investment, you better have a mutual fund, you better have an IRA, you better have a, whatever, a 401k to invest for your future.
Right.
Okay? So, of course, people are going to say, hey, there is a lot of fees. There is no account without fees.
Right.
Let me say that. There is no account without fees. Even your bank account, the bank that doesn't give you anything, has a maintenance fee.
Right, of course.
It's, generally they have about $12. The lowest I know is $12 every month as a maintenance fee. Every account, okay, as a maintenance fee, as a fee. Okay?
Right.
So people, try to, hide those things and say, hey, it's that every account has a fee.
So like the IUL has a fee associated?
A lot. IUL has not a fee. They have different fees.
And do they tell you about those fees?
So let's say they would tell you as a client, you pay $100, just an example. From $100, if they tell you just in fees, from your $100, $30 or $25 gonna go out just for fees. Would you buy this, something like this?
Of course not.
Okay, so that's why they're not gonna tell you.
Oh.
That's why that's the reason why they're not gonna tell you.
Okay.
You understand? They not just have one fee; they have a lot of fees. Okay, so we're not gonna go to detail.
Right,
That's the reason why, if you want to get more detail, come to us.
Right.
Okay, we sit down. Okay, we'll show you what is it in your contract.
Right.
And we will be more than happy to do that for you.
Okay. So on the next question I have here is, so why life insurance shouldn't be considered as an investment vehicle? And I know you probably explained some of it, but go ahead.
Yeah, some of it, yes. Insurance has to remain insurance and investment. Why? The day you put your insurance together with your investment, you're gonna consider you're gonna lose something.
Okay.
Okay, you're gonna lose something. Okay, so no one should consider mix the insurance with the investment. Okay, never buy an insurance as an investment vehicle. We have as investment, like we mentioned it before, mutual fund is an investment. 401k, 403b is an investment. IRA is an investment vehicle. You see what I mean? So never consider your life insurance never buy life insurance as an investment vehicle. You need to consider investment as investment and insurance as insurance. Like I mentioned it before, by doing that, you make the rule of 72 work in your favor.
Because can you control the investment with the life insurance if they bought them together?
Can you control?
Or is it the life insurance or does the life insurance company have it?
Would I say it's depend? It's depend. Even can you control? It's depend. It's like it's the same like you say if you have your 401k, you have some control. You have some control. Okay. Even the account manager, they have some control. You know the account manager?
Right.
The account manager who has the ability to run the account, to switch the account for you, to make the move in the account, depending on your investment objective. When things, let's say part of your money goes to gold. Now gold is working well. They're gonna put more percentage in of your money in gold. They call these people account manager, right? They have some control of it. They don't have total control. The market control everything. You see what I mean? You see what I mean? So we do not have really full control, but the account manager has most control. But the market control everything. I don't know if it makes sense to you.
Because I know you mentioned that they're going to lose something. So
you're going to lose, yeah.
If they decided they wanted the investment, then would they lose the insurance?
With what? When
if it was the life insurance and the
mix up with the absolutely. Let me tell you that's the reason why. We cannot take not all of the insurance are like that. So not part of it. The IUL works a little bit different. But we know the cash value.
Right.
In the cash value, like whole life, like universal life, just universal life. Okay, you just get the death benefit. The insurance company keep the cash value. But it works a little bit different in the IUL. Okay?
Okay.
It works a little bit different in the IUL, but is not a way to promote as a vehicle like investment vehicle. Is not a way, is not a reason to promote that as a investment vehicle. So we encourage people to always separate your investment with your life insurance.
Okay, because that's what I was going to ask. What do you recommend? So,
absolutely.
Okay. And then the last question I have is, should I invest my money instead of buying life insurance?
People ask that a lot. Should I just invest my money and instead of buying life insurance, because life insurance is too confusing? This agent say mine is better than yours.
Right.
Blah, blah, blah. They fighting each other all the time, right? But let me tell you, listen to this carefully. Life insurance is for today. You don't have control what's going to happen in the next 5 minutes, right?
No.
Right. Even in the next second, you don't know what's going to happen. That's what life insurance is for. Investment is for later on. Now, let's say you buy $1 million life insurance right now. What time it is now? Let's say right now it's let's say right now it's like 5:14. Okay, let's say 5:14 right now. It's 5:14. Let's say you buy $1 million life insurance. God forbid something happened to you tonight at 9 p.m. Let's say you were honest with the agent. Honest, that means you answered your questions correctly.
Right, and truthfully.
You did not lie in the questions.
Right.
Okay, you did not lie to the agent. Something happened. What do you think gonna happen? Your family will receive $1 million. That's what life insurance is about. Life insurance is for today. I know some people, they're very skeptical. They say, hey, I don't trust you. I don't trust you. Why not? The same day? Oh, I don't even have, a year, 2 years. Of course. As soon as you don't lie,
right,
you get the money. Your family gets $1 million. Life insurance is for today.
Right.
If anything happened today, that's what life insurance is about. Now tell me how long it's gonna take you before you have $1 million saved, before you invest $1 million, before you have $1 million in your investment account. How long is it gonna take? Years. It's gonna take you a lot of years before you have $1 million saved. Right or wrong?
Right.
Okay. Now, you could just go and buy $1 million life insurance. If anything happened anytime, your family is covered. And your family receive $1 million. Okay. You see what I mean?
Right.
You need life insurance because you do not have control of what's going to happen today.
Right.
Life insurance is for today. Investment is for later on, when you're retired.
Right.
One?
For the future.
You are pretty, very pretty lady, right? Nice, okay? You don't want when you're 67, 65. Do you expect to look the same?
No, I probably have a lot more wrinkles.
So you're not gonna look the same, right?
No.
You won't have the same abilities that you have right now. Now you need money at that time to make sure you have someone to, do things for you. To be able to pay these people, you need money.
Right.
That's the reason you need to invest for your future. Make sense?
Right.
Sure.
Yes.
Does that make sense?
Yes.
Investment is for tomorrow.
Right. It's for the
Later
future.
on. For years.
Right.
Insurance is for
today. For today. For now.
today.
Right.
For now. So hopefully you guys understand. Investment is for tomorrow. Later on. Investment later on.
Right.
Insurance now.
Right.
Insurance now.
Right. So.
Make sense?
Yes.
Great.
Awesome. Well, thank you for answering all of our questions. For our viewers, I hope that addressed some of the questions that we had, that we went over, and some of the things that may have come up. And if you have more questions, please let us know so we can help to address those as well. And if there's anything else that you guys want to hear about or have us to talk about, please let us know. Put it in the comments and reach out to us. Subscribe to the channel so you can get updates, because we have updates every day that come up on the channel as well. And we look forward to talking to you again. Thank you guys for connecting with us, and we look forward to talking to you next week. Thank you guys.
Bye.
Bye.